Best Loser Wins by Tom Hougaard is not just another trading book. It's a raw, honest, and deeply personal account of a trader's journey. Hougaard, a highly successful day trader, doesn't shy away from the emotional turmoil, the self-doubt, and the crushing losses that are often glossed over in other trading guides. Instead, he embraces them, using them as a catalyst for growth and a foundation for his trading success. This summary will delve into the core principles of the book, providing a comprehensive overview of Hougaard's insights, strategies, and the crucial psychological shifts required to transform from a losing trader to a consistently profitable one. Unveiling the raw reality of trading beyond the glamour. Hougaard's book begins with a stark and refreshing honesty about the realities of trading. He debunks the myths often perpetuated by the trading industry, the promises of quick riches, the effortless lifestyle, and the infallible strategies. Instead, he confronts the harsh realities head-on. The psychological battleground. Trading is not just about charts and indicators. It's a relentless battle against your own emotions. Fear, greed, self-doubt, and the urge to seek validation can be crippling. The high probability of failure. The vast majority of traders lose money. This is not a secret. It's a statistical truth. Hougaard emphasizes that understanding this reality is the first step towards success. The importance of perseverance. Trading is a marathon, not a sprint. It requires unwavering dedication, the ability to learn from mistakes, and the resilience to keep going even when faced with seemingly insurmountable losses. Key insights. Trading is a solitary pursuit. You are ultimately responsible for your decisions. Emotions are the enemy. Learn to control them or they will control you. 2. The core principles. Hougaard's winning formula. Hougaard's Best Loser Wins philosophy is built upon a set of core principles that form the backbone of his trading strategy. These principles are not just about technical skills. They encompass a holistic approach that integrates psychology, risk management, and market understanding. A. Embracing the best loser mindset. The definition. Hougaard doesn't view losing as failure, but rather as an opportunity for learning and improvement. The best loser is not someone who consistently loses. It's someone who accepts their losses, analyzes them objectively, and uses them to refine their approach. The importance of honesty. Be honest with yourself about your losses. Don't try to rationalize them or blame external factors. Focus on the process, not the outcome. Concentrate on executing your trading plan with discipline and consistency. The results will eventually follow. Small losses are good. Hougaard argues that the best traders are not those who never lose. They're those who can keep their losses small. Hougaard's approach. I knew I had to accept that losses were inevitable. I just had to make sure they were small. I had to become the best loser. He emphasizes taking small losses as the cost of doing business. Accepting uncertainty. The market is inherently unpredictable. Accept that you can't control the outcome of every trade. Focus on controlling your actions and managing your risk. Key takeaway. Embrace the losses, learn from them, and make sure they are small. B. Mastering risk management, the cornerstone of survival. Risk management is not just a component of Hougaard's strategy, it's the foundation upon which it's built. He views it as the most critical element of successful trading. Position sizing. Determine the appropriate position size for each trade based on your risk tolerance, stop-loss level, and the volatility of the asset. Stop-loss orders. Always use stop-loss orders to limit your potential losses. Never risk more than you can afford to lose. Protect your capital at all costs. The 1% rule. Hougaard recommends risking no more than 1% of your trading capital on any single trade. This helps to protect your account from large drawdowns. Hougaard strategy. Risk no more than 1% of your account on any single trade. If you can't handle it, don't trade. Knowing your risk tolerance. Understanding and respecting your risk tolerance is crucial for long-term success. Key takeaway. Position sizing is your number one priority. Never more than 1% risk per trade. C. The power of patience and discipline. Waiting for the right opportunity. Resist the temptation to trade every day. Be patient and wait for the market conditions that align with your trading plan. Following your trading plan. Develop a detailed trading plan and stick to it. This helps to eliminate impulsive decisions and emotional trading. Discipline in entry and exit. Adhere to your entry and exit rules even when it's difficult. Hougaard's approach. Discipline is the bridge between your goals and your accomplishments. He emphasizes that your discipline is the key to your trading. Avoiding overtrading. Recognize the signs of overtrading and avoid the temptation to make too many trades. Key takeaway. The best trades are missed. The most important thing is to stick to the plan. D. Understanding market dynamics. The foundation for analysis. Reading the tape. Hougaard is a proponent of understanding the tape, which involves analyzing the flow of orders and the activity of market participants. Key insight. Reading the tape can offer clues about where price is likely to go. Market psychology. Recognize the importance of market psychology and how it influences price movements. Identifying patterns and opportunities. Identify and understand the patterns and formations that occur in the market. Key takeaway. You must be aware of the way markets work. 3. Practical trading strategies and techniques. Hougaard doesn't provide a holy grail trading system. Instead, he shares the strategies and techniques he uses to analyze the market and make trading decisions. These are not rigid rules, but rather flexible guidelines that can be adapted based on individual preferences and market conditions. A. Day trading focus. Hougaard is primarily a day trader, meaning he typically enters and exits his trades within the same day. Focusing on volatility. Day trading thrives on volatility and price fluctuations. He emphasizes that the more volatile an instrument is, the more potential there is to make money. Leverage. Day traders can use leverage to take bigger positions, but this also increases their risk. B. Key strategies. The breakout strategy. Identifying the breakout. Looking for the price to break out of a defined trading range, such as a consolidation pattern or a prior high or low. Entry. Entering a trade when the price breaks above a resistance level for a long position or below a support level for a short position. Stop loss. Placing a stop loss order just below the breakout level for a long position or above the breakout level for a short position. Profit targets. Using a defined risk, reward ratio, or trailing stop loss to lock in profits. The false breakout strategy. Identifying a false breakout, recognizing when the price initially breaks out of a range, but then quickly reverses direction. Entry. Entering a trade in the opposite direction of the initial breakout, betting on a move back within the original range. Stop loss. Placing a stop loss order on the opposite side of the original breakout level. Profit targets. Using a defined risk, reward ratio, or trailing stop loss to lock in profits. Support and resistance levels. Identifying key support and resistance levels is a core part of any trading strategy. Looking to buy close to support or sell close to resistance. Order flow analysis. Reading the order book or tape to assess the supply and demand in the market. C. Understanding the importance of price action. Hougaard emphasizes the importance of understanding the naked price action. Reading the candlestick patterns. Recognizing how the candlesticks look in relation to other candlesticks can help identify trends. IV. Psychological mastery. The inner game of trading. Hougaard dedicates a significant portion of the book to the psychological aspects of trading. He shares his personal struggles and provides invaluable insights into developing the mental resilience required for success. A. The emotional roller coaster. Acknowledging the emotions. Trading is an emotional roller coaster. Learn to acknowledge and accept the emotions that come with it. Managing fear and greed. Recognize the role of fear and greed in your trading decisions. Learn to control these emotions. Controlling the urge for revenge. Don't trade with a wounded ego. B. Building a resilient mindset. Developing self-awareness. Understand your own biases, strengths, and weaknesses. Cultivating patience and discipline. Practice patience and discipline in all aspects of your trading. Embracing failure. View losses as learning opportunities, not as personal failures. Developing a winning mindset. Practice good mental routines. Conclusion. The path forward. Best Loser Wins provides a compelling and realistic guide to the world of trading. Tom Hougaard's insights and experiences offer a roadmap for transforming losses into victories. The book emphasizes that the path to success is paved with discipline, self-awareness, and a relentless pursuit of improvement. By embracing the best loser mindset, mastering risk management, and developing a resilient psychological framework, traders can increase their chances of achieving consistent profitability and sustainable success. Remember, trading is a journey, and the path to mastery requires continuous effort, self-reflection, and unwavering dedication. As Hougaard eloquently states, the market will give you everything if you have the mental strength to take it.